the idea of like, first of all, building a portfolio in the first place, or like having multiple streams of income, or like investing, is that you're finding a way to like protect your wealth and grow your wealth, right? But if everything you have is concentrated in a particular country or in a particular industry, it only takes one thing to happen for that to completely fall apart.
Hello and welcome back to today's episode of Ventoré Unscripted. Today I'm joined by Niels and our very special guest, Lámide. Lámide is the host of the UK's leading wealth-focused podcast. She's also an entrepreneur and investor, and she's worked with some leading names such as JP Morgan and Citi as well. So really excited to have her on today. So before we dive deep into everything you've done, all your successes, can you give us just an overview of your journey from London to Dubai, what you're working on now?
Okay, so I used to work in investment banking, and I was listening to a podcast from a guy called Ali Abdaal. Do you guys know him? Yeah. And so he had this digital nomad on, and they were just talking, normal podcast interview. And then she said something like, oh, people in Dubai are earning like twice the salary, not just because they're like being paid more, but also because there's no taxes. And I was like, no, I highly doubt that's going to be the case. So let me just apply. Let me go on LinkedIn and actually look for jobs and see what the salaries are. And I found only one job that sort of fit the description for similar to what I was doing. But they didn't put the salary there. So I was like, okay, I'm going to apply so that I can, at least if I get through the first one, then I can say, you know what, tell me the salary before I continue. And then I can like confirm what she was saying. I didn't actually want to move to Dubai. But then after that interview, I basically got the job. And then it was kind of like, so, okay. So at first I was like, okay, I know what the salary is now. And then it was like, oh, are you going to take the job? And I'm like, oh my God, yeah, like what? Like moving to Dubai. So I sort of was pondering it for like, should I go? Should I not go? Because earlier that year I did go to Dubai and I felt like it was overrated. So I was like, this place is like so overrated. So then like having this like, God, moving to Dubai was a bit like, oh my God, I don't know what to do. And I spoke to my dad and he was just sort of like, okay, even if you come back to the UK, if you go to Dubai for 2 years and you just save, you would save what you would save in London in 4 years. So why not just go? And then if you don't like it, just come back. So I was like, okay, fine. And then that's how I like moved to Dubai.
Amazing. And so tell us about what you're working on now. What's the kind of, with 2026, what's your kind of vision for this year?
So now I left banking. So corporate in Dubai is very different to corporate elsewhere. And so I think I'm glad that I moved to Dubai because being in corporate in Dubai, I think pushed me out. Whereas in London, I was a bit more comfortable. And the reason for that is because cultures are just very, very, very different. And you also go from like, London is like a main finance hub to you're going for like a very small subsidiary of like a global bank. So it's very, very different sort of environment. So I was like, okay, yeah, this is probably the time to take the plunge. I think I was maybe like 25, 26. And so since then, so I'm the CEO of WNB Group. So that is a media powered investment company. And so one of the main media sources is our podcast. And we sort of use that to obviously educate people about investing and building wealth. But, through that, we also support investors in making global investments. So one of that is, investing in Dubai, buying real estate in Dubai, also buying real estate in the UK. We also do like, I don't know if I would call it crowdfunding, but we pool investors' monies together to like buy properties, renovate them, and then sell them. So that's one of the main things I do, but also just supporting in like, so if a founder is like raising maybe like its first angel investments or their first Series A or whatever, we support in that. And just other like fundraising stuff. And then we have a workspace and podcast studio actually here in Dubai that we recently opened up as well. So this year is kind of, my words for the year is like simplify and intensify. So not adding any more to my plate, just focusing on what I already have going on and trying to get them better to the next level. So yeah.
I love that. Was actually one of my questions for later was, what are your words for the year? Because I've been doing mine as well.
Yeah, what's yours?
Well, they're very similar. Mine's joy and stability.
Oh,
so
nice.
Last year was all about building. This year is just about enjoying the build that's happened and just finding stability.
That's good.
So I love that. We're very aligned. So if we go like all the way back, to young Lámide, what did wealth mean to you? Like what was your relationship with it like?
Yeah, so I guess when I was younger, I don't even know if I didn't have a relationship with wealth per se. I don't think I even knew that word, but I definitely knew about money. And I think for me, it was very clear that we didn't have any, but it was clear in a bit of a weird way. So there would be things that I would ask women, would be like, I don't have the money for that. But it was, for majority of my childhood, it was sort of fine because I grew up in a low income area. So it was everyone's situation, like to not have. So it didn't really become apparent to me till I got a scholarship to private school. And then I went from like, you know, one of London's not so great boroughs to like Kensington and Chelsea, which is like one of the richest boroughs in Europe. And then you're going to a private school there. And so I'm going to school with like the children of diplomats and stuff. And it was just a very complete different experience to what I had grown up in. And I think that was sort of the first time that I was really exposed to like the dichotomy of like wealth and poverty. And I think that's when I started having this interest in like, okay, so what makes someone wealthy? How do some people end up wealthy? How do some people end up not so wealthy? And I just got a really deep interest in that. And so I went on to London School of Economics. I studied economic history, which it's its own discipline. So it's not like economics and history. You're actually kind of looking at the wealth and poverty of nations. So you're kind of looking at countries and their development and why certain countries developed and became rich countries, why certain countries struggled, etc. So I sort of explored that. So I would say like in the early stages, it was a lot of like, I would realize it as probably a bit of scarcity, but also maybe resourcefulness. Like when you don't have much, you become very, very resourceful. Now I can look back and be like, okay, it was probably a bit of scarcity as well. But that sort of, I'm kind of happy I grew up that way because it sort of put this drive into me to sort of understand about wealth building. And that's obviously a big part of my career now. So yeah.
You mentioned a media-powered kind of investment. And my question is, how did you get into realizing that media and kind of the newer versions of media, like podcasts, like Instagram, are the way to go when it comes to fundraising and so on?
Oh, so I would say that the media, like before I even started to call it that, I was just creating content. Like I didn't really necessarily know what I was doing per se. There was like, I remember when, so the reason why I started YouTube, so before it was I started doing a podcast, I was just like a normal YouTube creator whilst I was still working. And the reason for that was because when we started out, when I say we, like my graduate class, when we started out going into investment banking, this was like the highest paying job you could get like out of uni. Like London, if you want to make money, finance is one of the ways to go. And like 50K was a very good starting salary. And so I remember I was like, okay, I just need to get a 50K job, done. And I was watching this YouTube video of like a hair influencer at the time. This was like 2017, 2016. And she was like doing her goal. I think it was like January as well. She was doing her goals and she was like, oh, this month I want to make 50K. And I was like, this month? So I was like, I went to the YouTube comment sections and I'm like, did anyone else hear that? And then people in the comments were also like, did she say 50K this month? And then for me, I was just like, oh, I am in the wrong lane. I have been like working hard, like, you know, uni, like hustling hard, getting these like grueling 10-week summer internship to convert into investment banking. And like, I'm not downplaying like hair influencing, but someone is like, you know, washing their hair and, you know, influencing is hard, like creating content is hard, but like, and they're making 50K months. And I think at that point you sort of realize that like this relationship between like doing good at like university and being smart and actually making money, because of the internet and social media, that correlation has divorced itself. Yeah. And so I realized that like actually like social media is the new currency now. And so I was like, okay, I don't know how I'm gonna like make money from social media, but I just know that I need to be in that field because that is the way the money is flowing. And I remember being so hesitant about it because some people would be like, you know, the haters, they'll be like, when social media goes away, all of these people are going to be like, you're not going to have a job. So then I was like, okay, I'm still going to keep my job because what if it all goes away, which now is like crazy. Yeah. Imagine saying like, what if the internet goes away, right? Like everyone would be screwed. And that's how I started. So I started more like just organically, just like creating content. But then I started to see what other people were doing. Like, I don't know if you know Harry Stebbings.
No.
He has this thing called, what's his channel called? VC something. So basically he started off when he was, I think 15, just interviewing like people that were in like venture capital, which was very, very new at the time, and now it's a bit more popular. But they recently had a raise, and I think he raised maybe at least like $500,000. I think he's raised maybe even up to like $1 billion or so. Like he's raised a lot of money. And I was just like, wow, like this is what he's been able to do from his podcast. I was like, I need to stop seeing this as just me creating content, and actually like this is a media company that can do other things. And so that only really came together properly last year.
Super interesting. I mean, I do remember Gary Vee in like 17, 18 saying like, no matter what business you're in, you're always in the business / media business.
Right.
Like you have a bakery, then you're in the baking and media business. So yeah, very interesting to have that kind of combination.
Yeah. And we touched on it at the beginning, but you've worked for Citi, JP Morgan, these big names. And I imagine quite a tough environment, like quite a grueling environment to be in, from what I've heard. How has that, those experiences shaped what you're doing now, and what have you learned from being there and I guess the people you were surrounded with?
Yeah, so I think a couple of different things. So I think obviously when I first went into like banking, I thought like that was going to be the way out, like that was going to be it. So my idea was to sort of like climb the corporate ladder, and then everything, all the financial woes would be fine. But then there were a couple of different things that happened. So I think one of the first things I realized was that those people who I saw as like, these are the people who are really making money, they were still complaining about money. And so I just thought that once I get there, like everyone's going to be like, flossing out, like everyone's fine, everyone's financially, they've made it. And they were still complaining about money. And I noticed that they were still complaining about money in the same way that the people who I had grown up with from lower socioeconomic backgrounds were complaining about money. So I realized that this is either like the money that they're earning is not enough, or it's a bit deeper than how much you're making. It's also like how you're managing that money, because I just didn't understand, like you guys are making way more than the average person. And these are not even like my peers who were starting off on like maybe 50K with a 50K bonus. These are like our seniors who were still complaining. I'm like, so there's a deeper level to money than just how much you are making, right? And then you start to realize that lifestyle inflation is a thing, because what they're complaining about is, I've got to send my kid to private school, and this one's going to uni, and like, we just got a bigger house, which means we have a bigger mortgage. So that sort of like reminded me that like, or I guess it made me realize that it's not just about income, it's also about all the expenses and stuff in terms of how you are actually like your relationship with money. And then I think on the other side as well, so one of the things that I would have to do is go through like company structure, so like their org structure and stuff like that, because I was in like credit risk. And what I started to realize is a lot of these companies that were like headquartered in EMEA, they had all of these like little offshore places in the Cayman Islands and like all of these little things. And when I was looking at this stuff, which as an analyst, you're just sort of like doing it on your own. I'm like, why is it that you don't have any revenue coming in from like the Cayman Islands, for example? There's nothing going on there. Why do you have all of these subsidiaries in different places? Then I started to realize like, oh, this is like a tax play. And so I started to realize that like, one of the reasons, like I think that's then started to show me like the benefits of being an entrepreneur or having a business versus earning through what we would call in UK PAYE, or just like in general earning a salary. Because when you're an entrepreneur, you can control like a large like your setup. You can control your setup, you can control your taxes. There's so much you can do, there's so much levers you can pull to sort of control that. And obviously at uni I did a little bit of finance, so we understood like in terms of taxes, like tax avoidance is illegal, but tax avoidance is legal, tax evasion is illegal. But then I could actually like see this, I could literally see it, and I'm like, these are companies that are making like millions, billions or whatever, making so much money, and like you guys are still like figuring out ways to keep more of it for yourself. And so then I realized, oh, like even as an individual, if they are doing it, like this is something that I think I need to do as well. And then I realized, okay, I need to start earning money under a company structure. I need to be able to own, I guess just, well, I think in general, just like wealth is ownership. That is one thing that I realized from working in corporate. But yeah, I could go on and on and on, but those are just some of the things that it really opened my eyes a lot when it comes to like wealth building and like money.
I bet. And you're lucky to have that experience of being around those people and learning, but in school we don't get taught any of this stuff.
Yeah.
So it really is just a case of trying things, failing, working things out. And I mean, yeah, I look back at London and I'm like, like what you say resonates. I felt richer when I earned 20k a year than when I was on double that, because I had more time and because I was paying less tax. So I kind of just had the same money. And I didn't, you know, and the more money you get, the more you're like, oh, now I can get a nice apartment. Now I can go and get a coffee every day. And now I can go to this restaurant. And suddenly you don't have any more money.
Yeah.
It's just crazy how it works.
In your podcast, you speak to ex-Goldman Sachs and whatever, like, and people that I believe manage funds of like the top 1%. You are an experienced investor yourself. What are things that they do differently than the average investor or the average person? And also, where do you see trends heading in 2026? And what are investment strategies for 2026 that you're learning from interviewing all of those successful people?
So I would say that in terms of like the people that I've sat down with and the things that I've learned from them, I think in terms of just building wealth in general, to start your journey to building wealth, you should first focus on becoming world class at something. I think a lot of the times we think about, like, because there's that like phrase about the average millionaire has like 7 streams of income. People think that like they just have to like start multiple things and that's how you're going to get wealthy. But as I've like sort of sat down with these people, like all of them have this one thing that they were very good at that like allowed them to build a substantial pot of wealth. And then all the multiple income streams came out of that rather than trying to do multiple things as they were coming up. So that's one thing I've learned from them. And I guess in terms of investing and like trends, I think more people are opening up their eyes in general to just building wealth without borders. And I don't just say that to like reiterate the name of my podcast, but like seriously speaking, like a lot more people are like, even if you're an angel investor, a lot of angel investors in the UK, there are some benefits of doing angel investing in the UK. We have like some like tax advantages, but like the sort of opportunities that you're going to see in the UK versus what you might see if you're an angel investor investing in founders in the US is completely different. There's a lot more opportunities there. There's a lot more that's going on there. So you do see a lot of these people that I sit down with who have other interests elsewhere. And it's not necessarily the case that if you're trying to build wealth across borders that you have to move. Sometimes you just let your money move. And so a lot of them are doing that, even if they are unable to move because maybe they have a family or their kids are in school. They are ensuring that the capital that they have and the money that they have is flowing to where the opportunities are. So that's definitely one thing that I see that's very common with a lot of the people that I sit down with.
In your opinion, where are the opportunities flowing?
So where the opportunities are flowing is going to be dependent on what industry you're talking about. Because there's this, I don't know if you guys have heard of Nomad Capitalist. Yes. Have you seen this guy?
Yeah, I actually been on a YouTube video with him.
Oh, really?
Yeah.
Doing what?
Yeah, he did like live like a king in Bali. And
yeah, they had that
then
series.
he did interview us on like living in Bali and kind of how it is, entrepreneurship and so on.
Oh, sick. Yeah. That's so cool.
It was cool.
Yeah. One of the things that I really love that he says, one of his catchphrases is go where you're treated best.
Yeah.
And I think that really does apply because it just really like, it just depends on what sort of industries you are interested in, right? So like if you're interested in real estate, one of the areas that are booming right now is Dubai. If you're interested in like, I don't know, like tech or whatever, America has the biggest tech company. So I think it's really difficult to say like this is definitely the place that you should be or your money should be going because different places have different opportunities. Like we have some investors that regardless of like, let's say for example, they really want to invest back in Africa. So then that's your pool, what you're looking at. Then you have to think about, okay, so where are all the tech companies upcoming in Africa? Nigeria, you're looking at Kenya. And some people want to focus a bit more on, it just really depends on what you're focused on. But yeah, it's really hard for me to just say like, these are the places because it's so industry dependent.
Yeah.
Yeah.
Okay. So if we speak to our audience, a lot of people might feel quite overwhelmed by diversification. So where do you start? Like what would be your kind of first rule for someone who wants to look to diversify their portfolio? Where would you begin?
Yeah, so I guess the first thing to mention is the essentiality of diversification. Like, it's not just a nice to have. It's like, especially if you're thinking about wealth preservation, it's like mandatory. Like, it's something that you should 101% be doing, is diversifying your portfolio in some way, shape or form, whatever that would look like for you. And what you kind of, because the idea of like, first of all, building a portfolio in the first place, or like having multiple streams of income, or like investing, is that you're finding a way to like protect your wealth and grow your wealth, right? But if everything you have is concentrated in a particular country or in a particular industry, it only takes one thing to happen for that to completely fall apart. So let's say, for example, let's say, for example, you had a parent, right, who was very interested in stocks a couple years ago, let's say 20 years ago, but a lot of the stocks, what it included was maybe like traditional media, like Yellow Page. You guys know Yellow Pages?
Yes,
Yeah. Yellow Pages, maybe traditional print media, like this was their focus. If they handed you that stock portfolio today, that would have almost no value, because those industries have literally been decimated by the internet, right? And so that's where like the importance of diversification comes in, because it protects you, because you just never know. Like, we never saw COVID happening, right? So you have to diversify yourself, because there are always these black swan events that happen. And even outside of black swan events, just changes in the way we are as like humans and what we do in our patterns or whatever, which can cause some industries to decimate. Or like, for example, if you're an investor in the UK, you've got a whole big property portfolio there, they're always making all of these different changes and regulations that are not favorable to like landlord owners, right? So you want to diversify. I think to diversify though, I don't think you should just go around throwing your money everywhere and anywhere. You may want to think about maybe places that you might have a certain affinity to. And the reason why I say that is because you also have to think about what you're going, like if you're earning in multiple currencies, there's also a level of like managing different currencies that has to come into it, how to get money in and out of countries, right? Like it's
I haven't, before starting to deal with multiple currencies, I did not realize what crazy FX risk there is out there. Like, it can't just be that you lose 20% of all of your wealth because you have your money in USD instead of euro, or the other way around.
Literally.
Like 20, imagine
I've got a lot to learn, guys.
Yeah.
That's what I'm saying.
But like, and you can be squeezed so badly if you don't protect yourself from FX risk.
So it's a huge
crazy
thing, like huge thing. So you do have to think about that and like factor that in. So I was telling you guys before, like I had an apartment in Johannesburg, and it's like, and I think before you go into any sort of like jurisdictional place, you kind of need to understand like how that affects your investment. So just to give the example of myself, so I knew what I was getting into, but investing in Johannesburg in the way that I did, I knew that it was more of an ROI play. So the cash flow is actually pretty good because their property prices are relatively affordable in South Africa, especially if you have like you're earning in a stronger currency. But I knew it was more of an ROI play. So the cash flows were really good. But in terms of the capital appreciation growth, it's not as strong as I would see in other places that I've invested in. And so even though my property appreciated in Rand, if I was to convert that back into GBP, it actually stayed the same, which was not bad. But I already knew that going into it.
I mean, now with kind of South Africa being scratched off the grey list and whatever, like and Rand increasing in value,
right,
might turn out to be a good
exactly
play.
So there are so many different things that you literally just have to like you have to think about all of this stuff. You don't just go throwing your money away anywhere and everywhere, because it can get very complex. And even just like taxation, especially places like the UK or America, where they try to, America has been doing this, like trying to control whatever you earn even outside of America, but the UK is also becoming increasingly like this as well. So you really have to think about lots of different things. I forgot the question.
I can't remember the question either, but I'm learning a lot.
Yeah, and that I did interrupt you when you were saying that your apartment in Joburg is a cash flow play.
Right. So just thinking about that, and
we were talking about diversification.
Diversification.
So what your number one rule was.
Exactly. So I guess that would be just think about it. Don't just go throw your money anywhere and everywhere. You might want to start with places that maybe you like to visit frequently, or just like just think a bit more.
It's almost like for me, I see it as almost like it's the rule of delayed gratification. It's like you have to, I mean, correct me if I'm wrong or if you have a different opinion, but it's like building wealth, it takes time. Like you're thinking about, you know, it's an investment like of your time, your money, you're thinking in the long term.
Yeah.
And I think so many of us don't think like that. We
So
just
true.
want it now.
And just to add on what you were saying, I do believe that being intentional and like knowing exactly what investment serves what purpose.
Exactly.
As you said, like apartment in Joburg, cash flow play. And then you have other plays that they are about capital preservation maybe only.
Exactly.
Then there's some plays that only take off in like 10 to 20 years. And not, yeah, as you said, like it's not just throwing your money at the MSCI World or at some apartment here in Dubai. It's like, what is this
What are you
investment
looking for?
actually
Exactly.
achieving for you, and how does that fit into a bigger strategy, which is like, saving. It just takes time.
Yeah.
And I know from myself in investing that always is so easy to like be like, don't look at the numbers. It's like, don't make any kind of rush decisions of like, oh no, everything's going to shit now. But if you see your portfolio like 10% down, you go like, have I made a big mistake here? But then but then you just click on the like 5 year, and then you see like, okay,
it's gonna be fine.
Yeah,
it's like not letting that sort of fear and doubt creep in. But I mean, we're always interested in talking about community, because that's something that we've built with our investors and something that we continue to build. So do you have a physical community in Dubai? Is that correct?
Yeah, so in 2023, when I moved, I was working in corporate at the time, and I had a friend of mine who'd moved, I think the year before, and I was asking her like, I really want to like, because sometimes like I wanted to build a network outside of work. So I had friends from work, but it was like, if I want to talk about my colleagues at work, who do I talk about them with, right? So I was like, I need another group. So I was like, do you have any like recommendations for communities of women that are like professional? So there were a lot of like mum groups or like stuff like that, or like groups for like going out and stuff. I'm like, I'm not really that kind of person. I just want to meet like other like professionals. And she didn't really have a good answer for us to go to. So I was like, okay, well, why don't we just create our own thing? Because we were both creators, so we had some level of following. So we were just like, okay, we'll just create our own little meetup. And we called it the Professional Network, because it was just a group of young professional women in Dubai. And so we had our first event, and it was so transformational, because I think a lot of people like want to come to Dubai, and they want to come to Dubai because it feels like everyone is coming to Dubai. And so they feel like, because there's like, everyone's, there's so much to do, and they feel like they won't feel lonely, but then they get here and they feel some level of like isolation or loneliness, because obviously a lot of people would have left their family and stuff, and they've come, and the only real people that they talk to might be the people that they know from work and stuff, but it's just not the same. And so when we created that community, a lot of the women were just so grateful to be able to find similar like-minded people who were going through similar things. There were certain conversations that we were able to have that like it's not as easy to talk to about with your friends back home, because they just don't understand, right? And so we were able to create that community, and it was really, really impactful.
That's amazing. Is this something that sort of anyone can join if we leave the links below?
Yeah. So right now we do events in our space. So we have an event on Thursday. So but we sort of transitioned into like the workspace and the podcast studio because we wanted a hub for the community. But anyone is welcome to join. Our events are now not only women only as well. They're open to men as well. But it's open for anyone to join.
Love it. Well, maybe you'll see me there. I'm secretly just asking for myself. And I guess like following that, how then does community kind of accelerate wealth and help and support?
Oh, that is such a good question. How does community accelerate wealth? In what way, I guess?
I guess in many ways, in the sense of knowledge. You know, if we're looking at like a founder entrepreneur, you know, the support network, bouncing ideas. I think especially like I recently, and this is a trend that I'm kind of seeing, is a lot more kind of solo founders, solo entrepreneurs. And I haven't seen that so much in the past, especially with women. I'm seeing a lot more solo founders, And that's always something that I think is just so inspiring and brave, because I would never start a business alone. So even in that sense, having that community.
Yes.
And I guess also your podcast is kind of a community, and you assisting other people in fundraising and whatever is like accelerated by the community, the audience that you have.
Yeah. So I think I think it's a great question. I think one of the reasons why community sort of accelerates wealth, especially when you're building a community around like a particular thing, you all have you're all sharing a similar interest. So all of the listeners of my podcast will be interested in like wealth or investing or like just usually high performance individuals. And when you gather a group of people who are interested in the same things and you're moving towards the same mission, you're able to move there. You're able to go pretty far. I remember the first time I heard this quote, I was like, I don't agree. But it was like, if you want to go fast, go alone. If you want to go far, go together. And initially, because of, I guess, the way that I grew up, and I had to I felt like I had to do a lot of stuff alone to get to where I wanted to go. I was like, nah, I don't believe that. If you want to go far and if you want to go fast, go by yourself. But I think it gets to a certain point where you actually realize that like there is only so much I as one individual can do and can know. And so just having a group of people who are moving towards a similar direction but maybe have different levels of expertise can really, really help propel you. So I even remember yesterday when we were at the workspace, there was a lady there who was like an AI specialist. Yes, an AI specialist. She helps businesses use automate a lot of the processes in their business using AI. And she just taught me so much. And like it was some of the stuff to her, she was like, oh, like this is like, it was like second nature to her. She didn't think that other people wouldn't know. But I was like, I literally had no clue. Remember, she had this like GPT, I didn't even know this was a thing, but it's a particular GPT in Chat GPT, and it allows you to have Alex Hormozi as your business coach. So it's trained on all of like his books and all of his ebooks and stuff. And so like if you like ask it a business question, it will answer like Alex Hormozi. And I was like, this is great. I never would have known that if it wasn't for someone in the community. And so I think community has enabled so much just in terms of being surrounded by a group of people who are moving towards the same direction, and how that motivates you and keeps you going and propels you forward. But then also, again, like when opportunities come up to do stuff, whether it's to do with fundraising, etc., because we're all interested in the same thing, when we're bringing up these opportunities, they are also interested in it as well. And so we can support other founders who are doing stuff to also build their wealth as well, like contribute to that. But it's helped in so many ways. And I think just it always just feels better when you're going through things with people and you don't feel like you're alone. And so, yeah, I think having a community has been instrumental in a lot of different ways.
It's almost as though like, how is what you're doing even tangible if there's no one else to see it? I often do think like, would I do this if there was no one else around? Like, would I even care? No, it's so interesting. But so when we look at kind of the future of finance, where do you think that the system's kind of failing people? And what change would you want to see in, say, the next 5 years?
Oh my God.
But I know every system is different, so maybe we have to use the UK as an example. Or
That
Dubai,
is such a deep question.
We love a deep question here.
Yeah. Oh, where is the system failing people? I feel like the system fails people in different ways, in different places. So like I can compare like across jurisdiction, right? So I think that in the UK, as it pertains to finances, I think the system encourages people to play it safe too much. Like you're disincentivized, it feels like, or in my own opinion, from going for more and wanting more. And I don't know what it is about UK culture, but that just seems to be the case. And you will then start to notice when a lot of people who do who are successful financially will seek to leave the UK because they just don't feel like they are being supported, or even just, it doesn't even have to be something verbal, even just the way the tax structures are set up, whereby it's like after you earn a certain amount of money, like 60% of what you earn is going towards taxes. And it's not even that like people are against taxes, but I think when you can see the value of where your taxes are being contributed to and you see the benefits of it, you feel more okay to pay the taxes. But when it feels like you're being penalized for working harder and earning more, it sort of disincentivizes people from doing stuff. Like I know people who have turned down promotions because they're like, kind of like what you were saying, like if I earn more, I'm just going to be taxed more, so like it doesn't even put me in a better financial situation. And I think that financially disincentivizes people to go for more and push for more, because it's like, well, what's the point? Like I'm gonna only end up in the same place anyways. So I feel like, I don't know if that will change, but I would love for it to change. But then I think that it also, in general, we don't have as much of a risk culture, like in comparison to like the US. Whenever you go over there, people are a lot more likely to just take financial risks. And that can be a good thing. I mean, there's a good side and a bad side to that. But then I think like some of the things that I see with the US that's probably a little bit more negative is that they push a lot of like, credit card spending and basically just spending money you don't have. Like it's always like, take a credit card for this, you get a credit card, you get a credit card, you get a credit card. And it's like, I don't think this is actually good for people, because a lot of these people are getting into a habit of like living a life that is way above their means, and then you're not actually able to build wealth because all the money that you do earn is just spent paying back. Like especially when you're borrowing a lot, you don't realize that interest that you're paying, and especially if you're borrowing to like fund a business, that's a completely different conversation, because the idea is that you're using that money to make more money. But when you're borrowing to just fund random lifestyle stuff, you don't even realize that interest that you're paying, you're basically, your future self is having to pay for the fact that you don't know how to control your desires in the present day. And so all the money that you're then accruing in the future is just paying back your previous bad habits. And so, yeah, so I think in terms of like the system, I think different countries have different systems that I'm just like, that's probably not really helping people. However, I am not someone who is like, I am not like, do you know Gary's economics?
Yes, yeah.
Yeah. So I like what he stands for, but I am not someone who would rely on government and systems to change. I am more like it's up to the individual, because you should only focus on what you can change and what you have control over. Like, yeah, you can vote whatever, but we've been voting for how long? Things haven't changed, right? But you can control yourself. So I am more for like, take agency over what you can do, because even if the system does change, it may not change in our lifetime, right? And so what do you do in that case? So I'm actually more of an advocate for people to seek out their own like financial education, and just consume a little bit here and there, just to make sure that you are doing the right thing as it pertains to your money.
I think that's really good advice. I'm just glad that I left the UK before they implemented the exit tax. I feel like that was the best part of my 2024.
Same with me in Germany.
Yeah.
It's so hard, and you really have to seek the knowledge. I think that's the hard bit, and most people are too scared to almost seek the knowledge, because then they have to do something about it.
Yeah.
Because you kind of know too much. Okay, so if you had to name 3 things for our listeners to take away about building wealth, investing, what would those 3 things be?
Okay, so I guess my question for you before I answer that is like, who are your listeners? Like, what's the profile demographic, so I know who I'm talking to?
Yeah, so an investor who wants to diversify, invest in something that excites them, that they have, like you were saying, an affinity to, that they can feel proud of. So we do, design-led hospitality projects. So it's a very tangible investment. Someone who's maybe in their 20s, 30s, they've got capital, but they don't necessarily have $500,000 to invest in a hotel, but they'd love to own a piece of something cool.
So I would say my first one is to travel. Do they already travel?
Yeah.
Should we assume that they already travel?
Yeah. Or at least like wanting to travel and be in different places.
Okay. So I'm still going to say anyways, travel, especially if you're thinking about, you don't have to travel to invest, but I think it really does help if you're thinking about investing in different places to actually go to that place.
It is so important.
Okay.
Like, just absolutely agree. Just knowing how many people, for example, just get told, like, buy an apartment in Dubai or buy a villa in Bali. They've never been to Dubai. They've never been to Bali. And it's like, yeah, let's just throw money at it. Not understanding, like, how does that place actually feel? How does that place work in reality?
Exactly.
Do I even believe that this is a future-proof place?
Yeah.
Like,
Yeah.
none of that. Like, they just
Yeah.
have a social media version of what they imagine something to
Exactly.
be. And then they do it. I don't say that you need to, for example, like our investors, they don't travel, but it's because there's a very clear concept, there's a proven track record, and so on. And it's not a investment that they manage themselves. But like you buying an apartment or a villa somewhere, like, you better go and check out if you actually like the place where you're investing.
Yeah, I think it's just there's so much that you can't always grasp from just looking at things online. Like there's certain, sometimes it's the feel of the place or it's the atmosphere, and it can be a really good thing as well. Like you can get scammed from like not knowing and not traveling, but you can also actually somewhere you may not feel like, oh, this is not all that, and then you actually go there and it's like the vibe of the place, like it's very, very different. So I would say that if you can like try to travel to the places that you are thinking about investing in, and just traveling and just speaking to people in general, you will learn a lot. It really does open up your mind. The second thing that I would say if you're an investor is to think long term. Like investing is not a get rich quick scheme. I think a lot of people sort of mix up investing with, I don't know, like there's like, I don't know, FX, no shade, but like FX traders online who are just like, oh, I bought this currency and now look at my Lamborghini or whatever. Like that's not what investing is supposed to be. Like investing is for the long term, and you see the best results when you're in the game for a long time. So whenever you are putting money aside, make sure that it's money that you don't necessarily need tomorrow. I mean, you can, like, you know, if you're looking at more liquid investments like the stock market and stuff, but in general, you want to be putting money aside and you put it into the thing, you do your research or whatever, and you kind of just want to leave that thing and allow it to grow and to do its things, because where the benefit of investing comes in is with the compounding of the interest, the compounding of the asset or whatever. And so you need time for compound interest to take place. So already factor that into it as well. You're putting money aside, but you also need to put the time aside. And then I think the last thing that I would say for an investor is to just enjoy it. Like it's okay to invest into, like, don't invest into things that you don't understand, first of all, like, or at least don't put too much of your money into it. Like I still don't understand crypto. I think I was telling you when you guys I still don't get it. I put a little bit of money into it, but I'm not going to put my money fully into something that I don't fully understand. So make sure that every investment that you are putting your money into, that you are understanding it as much as possible, because I think when you understand it, in relation to my previous points, then you're more likely to weather storms. So like people who like, oh, like they buy a stock and then it falls tomorrow and then they're like, oh, I need to sell. You obviously don't understand how the stock market works, because if you did, you would understand that it's, if you bought a good stock anyways, it's probably going to rise again, right? That's just a part of it. Or like property market, okay, there's a boom, there's a bust or whatever. If you have an investor's mindset, when it goes bust or when the property prices fall, you would think, oh, this is a good time to buy, not, oh my God, I need to sell, right? So I can't remember the point that I was making, but that's the final one.
And on your second point, I do really like that, because like one mental framework that I use is I put money and I transfer it to a different account, and once it leaves my account, I kind of like view it as it wouldn't be my money anymore.
Right.
Therefore, I never think that I have money, and therefore I don't end up like splurging on unnecessary things. Like, and that is that delayed gratification thing that you were talking about. It's just, even if it's just a small amount or a big amount, depending on how much you earn, but if you just set that aside and you transfer it to your stock portfolio account or savings account or whatever, and you just stop viewing it as your money, you won. Long term, at least.
Yeah, honestly, guys, if you need tips on delayed gratification, I'm your gal. Even on my birthday, I got the metro to the gym just because I was like, it may be my birthday, but I'm not spending £20 on a cab when I can get a £1 metro. And my friend was like, but it's your birthday. And I was like, I don't care. Like, that's £19 I've saved. I'm like, I will make the saving.
The important thing is then investing the £19.
That's true. Yeah, that's the bit I'm not so good at. I will get that. But I just want to buy a piece of one of our hotels. So that's what I'm saving for. But thank you so much for coming on today, Lámidé. This has been really, there's so much to take away and unpack, and we really appreciate it. We will leave all of Lámidé's links below, links to our podcast, and we'll see you very soon. Thank you so much for watching.